For the final trade of the day, we are sending it right over to Alan Knuckman. He's the Chief Market Strategist at BullseyeOption.com. Hello, Alan. What are you watching in this market?
Hello, Angie. With me, as you know, it's all about price. We're starting to get a possible price base in place for the S&P.
Tell us more, because the stock market sell-off was fairly sizable recently.
So it's been, 10 days since the swing lows that we've seen in the S&P, making a little base. Then Friday was important because we were down and not out. We bounced right back on Friday after gapping down sharply and scaring the markets one more time. But most importantly was the VIX, the fear factor, was nowhere near those recent swing highs. So that was some sign of strength, and maybe a bottom is in place.
You do have a point, because on Monday, the stock market took off like a rocket.
And then Monday, a big pop. But again, let's caution. It's good to see us build on that turnaround from Friday. But we need to get about 58.25 in the S&P, which is the halfway point of the drop from the top. And then we'll see if we can get some movement to the upside. But again, focus on percentages. Monday's action was only 1.5%, 2%. So it'd been an early sell-off of 1 or 2%. Now it looks like we're not getting any big bounces, even though it felt like it yesterday. It did feel good for the bulls.
Yes, it did. What's your trade of the day?
All right, bullish opportunity. I'm looking at Vale, Brazilian mining stock. The PE is 6. So it's ridiculously inexpensive from a price to earnings ratio standpoint. I'm seeing money flow into that stock. That's what I look for. We also had bullish divergence back in January to make a bottom base. It made new lows, but not new highs. Implied volatility, a sign of a sentiment shift for a downward trending stock. This is down 25% from last May's peak, but it is up 20% from that January low. Overall, it's down 55% from the top that we saw in 2021. So it's got a lot of positive bullish risk reward.
What is the chart telling you, Alan, and what is your trading strategy?
The stock's been trading between 8 and 10 now for about 3 months, going on 4 months. A breakout of that target's 12. We're sitting at about 10.15 right now. Because this stock is inexpensive, we're able to buy an in-the-money call. A June 8 call is trading for about $235, $240, let's say. The stock's at 10.15, so it's $2.15 in the money. The expiration break even on this option is 25 cents up above. So it's got the setup I like. It's got that bullish divergence. It's got that money flow. So somebody sees something, and it's a nice setup for spring.
We hope that stock springs to your target price. Thank you, Alan.
Thank you.